Welcome to Investigate. I'm Lahiru Tilakaratne, your Chief Investigator. Today I'm going to interrogate two special guests from NDBS Securities who will let us know everything that you need to know about how to invest in the equity market in Sri Lanka, that is the Colombo Stock Exchange. This episode is especially important for you if you are a foreign investor or a non-resident Sri Lankan who wants to participate and contribute to the growth of Sri Lanka, all the while making a profit out of it. So join me in this video. Let's see. Welcome both of you to Investigate. And the purpose of this channel is basically to educate and provide research on investments, especially the capital markets, and especially for young, investors who are getting interested in this field or in this industry. And also for people like me who are resident abroad and who has now accumulated enough capital and they want to invest back in Sri Lanka and to find ways how to do it properly. And that's why we have you here today with us. And again, thank you very much for joining. So, okay, imagine I'm a guy abroad, either Sri Lankan or non-Sri Lankan, a foreigner, and he sees this beautiful country, sees the new CBSL report, and follows the economic details and see the macroeconomic picture is developing. And they are like, okay, seems like a good prospect for me to park my money. And also looking at the stock market, if you look at the returns from 1980, it has done incredibly well compared to given the circumstances that the country has gone under. So been through. So how would you go about it? Anything that you like to add about the Sri Lankan economy at the beginning, or maybe also the stock market and how resilient it has been and the prospects,
Sure. So, before we start with the stock market, I would like to take a couple of minutes to introduce ourselves and who we are and how we fit into the whole organization. Is that okay with you, Lyra?
That's fine. Let's go ahead.
So basically, we are part of the NDB Capital Group, which is owned by NDB Bank, one of the largest financial institutions in Sri Lanka. So the NDB Capital Group has 4 different arms. NDB Securities is a stock market arm, where Nikis and I work at. There's NDB Wealth, Sri Lanka's largest wealth company. We have NDB Investment Bank, again one of Sri Lanka's largest also finance investment banking houses we have around. And NDB Private Equity. We have done some major projects, and on some projects we are on exiting stage. We also have an NDB Investment Bank branch in Bangladesh, which we incorporated a few years ago, and that is also getting momentum year by year. As a whole group, as NDB Capital Group, we are looking at Sri Lanka. We are the largest financial conglomerate, and that's how we all fit into this company.
Incredible.
So thank you very much for the time. I would like to pass you on Nikita to provide you a brief about Sri Lanka and the market.
Right. Thanks, sir. Okay, so let's start from the point where Sri Lanka defaulted. So we've had very difficult few years. We've had a constitutional crisis back in 2018, Easter attacks in 2022, extended lockdowns, and an overthrow of the government. And then in the worst case scenario, in the worst possible instance, we defaulted on our debt for the first time in 2022. So from that time onwards, I think we've recovered phenomenally well. In 2024, we recorded a near 5% GDP growth. Now, it's not the growth itself that is important. We recorded this 5% growth when the IMF expected us to grow by 2.2%. And it's generally that gap in expectations that drive equities growth. Now, things like equities, they are considered a leading indicator as opposed to, say, lagging indicators like GDP, inflation, unemployment, deficits, and so on. So, leading indicators show you what and how much you expect from economic indicators and corporate performances rather than what has already happened. So your equity indices show you how much expectations you have against what has happened.
Okay.
So phenomenal bounce back, and there are two other things that also add to this. In addition to the bounce back, we also have close to 800 basis point drop of benchmark rates from its 2023 peak. So we are looking at very low funding costs with low interest rates for equity, and we're looking at the other thing that's pushing equities markets growth, in addition to corporate performance, is the fact that capital gains are not taxed by the Sri Lankan government. So the combination of all of this, superior performance, superior bounce back, corporate growth coming in, and we are significantly cheaper compared to our regional peers. Right now, Colombo Stock Exchange is trading at a trailing 12-month PE of about 9 times. Compare this with India's 23 times, Pakistan's about 12. You're looking at Bangladesh trading at about, again, 15 times. So we are, despite all of this happening, despite us seeing the indices trading at the highest possible ASI numbers historically, we are still cheaper. We're still significantly cheaper than the peers. Not just the peers, we are even cheaper than our historical average. If you take Sri Lanka's post-war CSE, you're looking at an average of 13.5 times PE compared to the current 9x PE. So we are potentially looking at both a re-rating in terms of PE and also an earnings growth, which I'm looking at an average of 20 to 25% growth in 2026 of corporate earnings. So it's a multiple sectors that you're looking at that would take our indices further up. So there's a potential that we are looking at another 20% increase in the ASI indices in the next 1 year.
That's incredible. This is a point that I've noted as well, the PE, that is the price to earnings ratio. Don't worry, we will describe that later in the video to the viewers who doesn't understand PE. It's actually, this is one of the reasons I thought of investing in Sri Lanka, because I'm a value investor. I always look at the value. I do the DFC, and I never buy anything, even if it's the best company in the world, overvalued. This is my principle.
Sure.
So basically, so when I looked at Sri Lanka and India per se, India is like trading at 26, so I don't know, 22% like a PE. And then I didn't still look at Bangladesh or other countries in the region, but the only country that looked reasonable in the region and has a very strong economic potential, as it has already demonstrated, is China, which has about a PE of 11, and that is considerably so. Compared to China, we are even cheaper than China at nearly 9 PE. So this is one of the main reasons. As also when you look at the debt to equity, these areas are also very fairly valued here. The ratios are quite healthy from a value investing point of view. And that's why I thought, okay, let us invest and let us encourage a lot of my friends, foreigners, and also my Sri Lankan friends around Europe. Let's invest. Because one thing that I noted when I did my research is that there are only about 40,000 active accounts using the CDS. That is about, I don't know, when I looked at the entire number of stock accounts, it's about 4% of the population only has a CSE account or a CDS account. And out of that, only 10% is actively trading. And that shows that there's incredible potential for growth As more people would come in, it will become highly more liquid. As the demand increases, the prices will definitely rise. There's incredible growth for a potential for growth. With that said, so how do I start investing?
That's a very good question. So there's few ways to start investing. So we categorize different clientele. We get the local clientele who is looking to invest, who has a rupee bank account and a national identity card. There are individuals who are living abroad, like yourself, where they can also open through the normal route of opening a LKR account. And also there is a route of the IIA process. If you go through the three processes with you, so if you are a resident in Sri Lanka or if you're a resident living abroad, you can download the Colombo Stock Exchange mobile app, which is downloadable on Google Play Store or the App Store. And you can fill in your personal information, attach your national identity card number, attach your national identity card, take a picture of it, and also take a picture of your bank statement. One of the key elements when filling the form is choosing your broker. So we are called NDB Securities. There's a drop-down option. You can choose that, and be highly appreciated. And then we can service you further from there onwards. If you're an individual who's living abroad and if you want someday to take your funds back to your home country, you can also open an IIA account in hard currency, i.e. euros, USD, or whatever hard currency that the bank offers that you choose. NDB Bank can provide you the IIA account services, and we'll be more than happy to do so. And I can provide you the information as on a later stage.
We can definitely put it in a description, like in the description with a link with all this information,
yes.
exact process and the procedure involved. What I've noticed when I try to open an IIA account is that you have to meet certain CBLS regulations. I mean, you have to prove that you are a resident in that country. I mean, either you should have a permanent residency, or you should have a long-term residency card, because you need to have a foreign residence address. And yes, so what do you think about that? Like, anything that you have to add on that?
Yeah. So again, this is to safeguard obviously the rupee devaluation. So like, for example, Sri Lanka is predominantly in other export countries. We export outside globally. Well, a lot of people work in the Middle East, a lot of people go to Europe, and now they are moving into Australia and other countries as well. And 70% of them are on temporary work visas, or they are for a short time based on their work requirements. So what the government's trying to do is, as we all know, we had an economic crisis, and dollars were very hard to come by at one stage. And to safeguard the country's dollar reserves, what we're doing is we are limiting this facility only for individuals and foreigners who are going to bring currency from their country to Sri Lanka, and returns will be moved back in the country as well, back from the country they receive the money from. Yes. So again, this is an economic decision that the central bank and the governor has made, just to safeguard the interest of Sri Lanka's foreign reserves.
Okay, brilliant. So specifically on this IIA bank accounts and any other form of accounts that foreigners or even NRSLs can open, I have also scheduled another interview with the NDB Bank, and for that I can get very more like details from them on that part. Now, when it comes to let's say we set up the IIA account or any other accepted investment account, and then the next step is we set up a CDS account through you, and now when I want to deal directly, like let's say you give me access to a trading platform, for example, Atrad, this is what we use. And an obstacle that I faced is that there was this document that I have to sign, where I have to, of course, that's the agreement between DBS and the investor, the account holder. And what I experienced was that since I am a foreign investor or a non-resident, I have to give a certain cap, or otherwise you won't this is, I don't know what the information that I was initially given. I wouldn't be given access to a trade. I have to place my trades through my stockbroker manually. But then Shamal came into the picture and clarified that. And now I have the ability to trade directly. I just have to update my what do you call the buying power. That is the amount of money that the trader will give us or the broker would give us to buy shares. And I then have to give a notice in writing to the bank and also NDBS to reserve that amount, right, in my account for this particular investments, to pay for these investments, right? And after that, there's another process of like submitting selling notes, the sold notes and bought notes, trade notifications. So this process is still a little bit complex compared to my experience with other trading platforms in other countries. For example, I invest through FinanceNet, basically, or in China or any place in the world that I want, but I don't have to go through this process. So can you give me an idea how to like clarify this for the viewer to understand, the viewers to understand this better?
Yeah. So this is actually a very good question, and we get this a lot as well. This is actually the industrial norm. So when, okay, first of all, let me explain to you the normal process.
Shamal, if you could sorry, if you could come a bit closer, then yeah. Because I could hear Mr. Nikita very clearly. Now, with you, get a small high frequency pitch.
Okay, can you hear me now?
Yes, that's better.
Okay, so let me answer the question. So I just have to clarify how it normally works, and with IIA, how is it different? So if you own a local CSE account trading in LKR, your funds are deposited into the central depository system. So that means your funds are already in the account and you can trade up to that buying power. And further, if you're looking for a credit agreement, we can provide say 30-40% of what you have invested in the stock market as a loan, and you can buy further shares on that, and you have 3 months to settle. Now, with an IA account, it's slightly different. So your funds are not held with the Sirius account, which is a direct link to the Colombo Stock Exchange. The IA account is actually independent from the Colombo Stock Exchange trading platform. So when you're buying shares, you're technically buying shares on loan. So that's the reason why we ask your IIA bank to confirm you have the sufficient funds and can you block those funds that will enable you to buy for a particular amount. So I understand Sri Lanka is not robust or not advanced as other trading platforms around the world. So to negate this fact is where like I come in or the advisor would come in. So if you tell us in advance, we are happy to contact the bank on your behalf and request the bank or confirm with the bank you are going to buy, for example, shares for $1 million or 2 million rupees. You have the funds in your account. If they confirm yes, then we go ahead and provide you the buying power. It's not a must that you contact the bank always and tell them that you are looking to do this. Long as you at least tell the advisor, we're happy to take that extra step and contact the IIA bank and sort your buying power for you.
Actually, it became after you clearly explained me the process and I got on board and I understood the process, it became very seamless to me. I mean, especially with you, you're available 24/7. Like if I say, because of the time difference, if I say, Shamal, could you like give me this prime power, I will inform the bank, and you just do it, boom, immediately. And I then block the amount through the bank in the account, IA account, and then I start buying shares, and it's easy. And actually, what I found, especially for value investors, it's actually very good because you can't buy and sell as you wish so quickly. I mean, that is something very important when it comes to patience. This is, I think, something that I want to teach through the channel. Patience is the number one think quality or value of an investor. If you don't have that, nothing else matters. And this is actually, it's not because because, for example, there are so many friends that I know who are trading, and they have this issue of clicking things very quickly because it's so easy. One click, you buy and sell. But here, there's this extra step that I have to go through you, and then I have to go to the bank. So that actually gives me a little bit more time to think. It's actually a good buffer. And I think if it's possible to be kept that way, it's better for people who are learning to invest. And okay, so since we cleared that out, anything else, I mean, that you could add when it comes to something that foreign investors or Sri Lankans living abroad should be aware of or should take into consideration?
In terms of account opening or in terms of the reason to invest?
Account opening, I think we have mostly covered it. I mean, basically, if you want to go through the exact each step by step, I think we have so many good documents which explain how to do it. So we can always add those things. But something that you can add from your own experience, what should a foreign investor or, as I said, Sri Lankan living abroad should be aware of or should take into consideration if he or she wants to invest in Sri Lanka, the stock market?
Okay, this is not a process question, right?
This is not necessarily a process question. Okay, this is, yes.
Right. So if you're not if you're not living in Sri Lanka, it's very likely that your funds can be in foreign exchange. So one of the first risks that you should look at is the potential depreciation of the local exchange rate, local currency. So if you're earning in USD, you need to see if the LKR is going to depreciate more than proportionately than what your returns would be. That's the first thing. Two, you need to keep in mind also that Sri Lanka is, we were in the emerging market, we are considered a frontier market destination in terms of investment. So we carry the same risks and rewards of the normal frontier market investment. So this covers governance, policy, government, stability of the government, interest rate fluctuations. Say interest rate fluctuations would impact the corporates in terms of cost of capital, cost of funding. Then policy shifts, like unforecasted policy shifts, can affect your earnings, affect what you take back. And what else? So I covered, what you would call the pestle reasons, political, economic, sociological, economic, and legal. Look at these things, but for Sri Lanka as a frontier market, what you need to look at mostly is for interest rate stability, FX stability, that's the stability of the LKR, and the strength of the government, and the possibility of the existing government policy to change without notice. So compared to what we've had in the last 20 years, the risks right now are significantly lower. I need to mention that even this coming as taken from the stability of the government. This is one of the largest majorities presidential and parliamentarian election has seen for the NDB-led coalition government. In terms of interest rates, now we just came out after a few months of deflation. So we are expecting interest rates we are expecting the headline inflation to stabilize at less than 5% for the next 15 months or so. So inflation is going to be significantly lower, and you would make, even with the interest rates being this low, you're likely to make real returns on savings. Okay. Right? So with interest rates being low, your ability to fund equity investments also would be low. And I just named the risk factors that are around, but historically speaking,
Yes, brilliant. So let me ask you, sorry for interrupting. So did you have a deflation or disinflation?
Deflation. We had a deflation because we had significantly high inflation in 2022. The central bank published inflation went as high as 70%. So you could imagine what the upper middle class and above faced in terms of, say, retail-driven inflation in that period. So as things normalized, the base that you're comparing against is significantly higher. So that's the reason we had noticed.
But the prices actually did not, the rate of prices increasing slowed down, or the prices actually decreased from the previous level?
You actually had decreases in prices, but what you're looking at in inflation is the rate of increase in general goods and services.
Okay.
So that's significantly lower than what we saw, or in the retail.
And to all the viewers of Investigate, if you don't understand these ideas, these concepts about economics, I've uploaded a new video series on financial literacy. You can follow it up, and it's based actually on the CBSL curriculum, which they launched recently in 2025. And it's actually a very nice service done by the CBSL. It's a very well researched and studied curriculum, and I have done my best to cover through video lessons and episodes some of the most important principles that you can find, or like concepts that you can find in macroeconomics, as well as personal finance management and a lot of other things, including investing. So have a look at it so you can understand these concepts more clearly. And coming back to let's say you mentioned exchange rates, interest rates, very true, inflation. Now, since we mentioned about interest rates, many people talk about FDs, right? Why would we take the risk of investing and potentially maybe get about 10% to 12% and still run the risk? Okay, this is something that I face when I try to encourage investing in Sri Lanka with my foreign friends here. They would say, if I really want to put money in Sri Lanka, I put it in FD, because they give me about maybe 9% or 12. If I give a really big sum and if I keep it for 5 years or 10 years, they'll give me a huge amount.
What's the rate you're comparing this against?
This is what I want to get from you. I know throughout the years, Sri Lankan Stock Exchange has performed around 14%, CAGR.
Right.
Yes, so that's a better rate than what you usually find from banks. But if you are ready to run that risk, and it's hell of a lot more interesting, sorry for using that word, investing, and than just parking your money in an FD account. Any ideas on this?
So from the time we hit the lowest before the presidential elections, I think the almost linear increase in the SI has hit about 82% from that point. So from then onwards, so if you're actually comparing that against the FD rate, the interest rates are significantly lower. It's significantly lower than the historical FD rates that we've been used to. If you compare this with, say, in 2022, I think around 2023, we still had FDs available to us at 30%, right? This we don't have anymore. The FDs are, most FDs that you can get are pretty much single digit. There's that downside. Add to that the additional taxation that's put on FDs, which we don't see on CSE equity gains. There is no capital gains tax.
Just to add to that,
incredible.
Just to add to that point, so to be very, very clear, any dividends that you receive from the CSE on any particular stocks, there is a 15% capital gain tax that will be withheld before funds are being transferred to the account.
Okay, it's very interesting. I mean, this is something, it's actually a misnomer among the Sri Lankan community, that they want to park their money, if they want to bring the money to Sri Lanka, in an FD account and just go back and rest. Or the other... Yes. Or the other asset class that many people are interested in is either apartments or land. Like when it comes to real estate, how well has CSE done, or equity, the capital equity market done compared to real estate?
Honestly, that's a bit of a hard question to answer because I don't have a representative number to give you to compare real estate with CSE numbers.
Yes.
But say also it's the different classes of real estate, say land, shop, say retail space, and residential apartments in say lower end, high end, middle end. They all move very differently. So just for the lack of a representational figure like the all share index, it would be very difficult for me to compare them together.
Recently, I read a news article, I think on Daily Mirror, saying that in the Colombo market at least, there was about 12% growth in the what do you call, the purchase price or the selling price of sale price of land. So what I found is it's a good passive income if you're especially renting it. Okay, that's something that we can take into account. But other than that, like look at famous investors around the world, people who have actually invested in capital like equity. So equity market has performed much more better compared to people who actually invested in real estate. And what I've seen is that for many people, even working abroad, unless you're about to retire, you don't have the amount of capital to immediately buy a worthwhile property in a location like Colombo or in a touristic area without going into debt. So if you go into
now
debt,
that you mentioned rent, I think it's important that we look at the concept of rental yield. So rental yield becomes a lot more attractive when the overall interest rates are lower. So when the overall interest rates are lower, what you're comparing your rent against is lower, and also it's easier and more cost effective for you to borrow and invest in real estate and compare that against your rental yield.
Okay.
Yeah. So I just want to add what Nikita said is totally true, and also what you reiterated, that individuals are more prone, especially Sri Lankans, when living in Sri Lanka or overseas, they're more prone to go into fixed products or fixed assets than have and buying investing stock market. So what we're saying is, we're not asking you to invest all your money in the stock market. We're asking you to invest a certain percentage, preferably depending on your lifestyle, your age, and so on, be 10 to 30% of your savings stock market. Others, we totally encourage you to have some funds in fixed deposit, easy access accounts, maybe in gold, maybe in property, and so on and so forth. So when someone is investing, or when they're looking at value addition and value growth, what we encourage is have a diverse portfolio, because gold could be the best thing at the moment, whereas in the next day could be something that is going to drop in value by 20-30%. Similar with property, similar with even stocks. So by having a diverse portfolio, you're giving the best opportunity for your wealth to grow, and also minimizing risk going forward as well.
That's very true. I mean, I completely agree that from a theoretical point of view, but people and many people do it, and basically you cast your net wide and diversify as much as possible. And what I've seen because again, from a value investing point of view, people like Warren Buffett, they say only people who don't know what they're doing, they diversify. And I mean, yeah, because diversification could lead to dilution, of profits and gains.
I absolutely subscribe to that point, but this is the thing. Diversification helps to mitigate your risk.
Absolutely.
So people like Warren Buffett and Charlie Munger, they tend to do excessive research on what they do. I think they spend all of their days reading, analyzing the companies that they look at. So, and they have multiple investment analysts analyzing further stocks. So if you're doing it at an institutional level, it pays to focus as finely as possible into the smallest number of shares that you want to amplify and focus your investment on. It makes complete sense. So I am a proponent of not putting all of your eggs in one basket, but also don't put, say, one egg in each basket. So the whole point is to beat the benchmark. But if you concentrate your investments to as few shares as possible, say, look at the 20% of the stocks that will give you 80% of the returns, right? So by all means diversify, but do not diversify too much. Or like follow Buffett's and Munger's advice and shrink, like have a laser focus on the fewest number on make a very focused investment.
That's
right?
Absolutely.
If we look at, say, instead of investing in 50 shares in the market, it's a lot wiser to bring it down to 5.
Exactly.
Put your money in 5 shares that you have the most faith in. Absolutely. That's the best way to outperform the index. But make sure that you do as much as possible work on where your savings go, as opposed to throwing your dart at a random stock.
Exactly. So I completely agree with what you said, and I subscribe to that too. And this is what I've been doing with the Colombo Stock Exchange. Shemal knows my number, but I mean, I'm keeping it very low at the moment because I'm still learning about the market, and I'm basically just to select the stocks that I've selected so far. I took about at least 4 months of research, reading about it, studying it, analyzing it, because I'm full-time into this. I'm not full-time since I'm investing as a full-time investor, even though I do other work. So now coming back to that very pertinent point that you made, most people don't have the time to do the research. And even if they do have the time, sometimes they don't have the temperament, and sometimes they don't have the skills and the competencies. For people like that, in other countries, there are index funds or even ETFs, like Vanguard, for example, BlackRock. So many options available. Why is not that the case in Sri Lanka yet?
We don't have index funds yet, although they are looking, the infrastructure is being built. What you have are unit trusts. Now, unit trusts make investment so much easier for the average person, because unit trusts are picked, the constituent of the unit trusts are picked by experienced fund managers and analysts. So that is something I would very much push from my end, even for those who do have the time. So the thing is, you invest under your in your net asset value, and they are being picked by professionals. I think this is something that the average investor can very well look at. I think that's a very good option left on the table.
Oh, that's nice. Do you offer any units trust at NDB Securities?
So our sister company NDB Wealth offers quite a few, depending on your risk tolerance and your preference. There you could choose between the amount of fixed income and equity that you're used to. There are equity only funds too, and they manage well over $1 billion.
Whoa! So, $1 billion. $1
billion. Yes.
So yeah, the Wealth, as I mentioned initially, they are the largest.
That's the largest
wealth management company in Sri Lanka by far.
But they're not publicly listed, though.
They're not publicly listed.
Unfortunately. Okay. All right. So coming back to this, like, is it similar? Like, how does it work? I might then, since you gave me the idea also to give them on the show as well. I mean, how does it work? Does it work like any other Vanguard, like, or index fund? Do they charge a commission or a flat rate? How does it work? Do they charge a fee?
They do charge, to be honest, they do charge a fee.
There's a performance
fee.
And a flat rate.
And a flat rate as well, but the full details we need to get to our sister company who can give you a full
Let's
overview
get
of
them
our
on the show as
interviewer.
well. All right.
Yeah.
Okay. So thank you very much for all that information. And I mean, I've also seen about real estate investment trusts, but I've tried to access them through the CSE, but it doesn't lead me anywhere.
Yeah, Sri Lanka doesn't have an investable REIT yet. There have been about 2 or 3 instances where people, well-known institutions, wanted to create a REIT, but we haven't been able to successfully launch a listed REIT yet. But there is infrastructure that's been created. I think we could potentially look forward to a REIT in 2026. I think the CSC is doing a lot of work in getting a REIT on board because there is a significantly large real estate market compared to the size of the GDP as opposed to market cap to GDP, listed market cap to GDP. So it is essential that the average investor who doesn't have 30 or 50 million to actively invest in the real estate market to have a part of that benefit. So it makes every sense to that. I think the infrastructure is being laid. I think we could see one next year.
Okay, that's brilliant. Now, coming to question about the market itself, I mean, of course, everyone has to make their own judgment and study by themselves about the market. But since you have been analyzing and been in the trade and studying this market for years, like, is it basically, this is a misnomer? I don't know whether it's a misnomer. I have not necessarily seen it. I saw it recently regarding a certain stock that went up, I don't know, 65% or something like that. I don't like to name the stock. But other than that, like, is it actually controlled by few big players and you'll just become a victim of their decisions at the end of the day? Is that true? Because this is something that people, when I try to convince them to invest, they bring this up. It's just run by few big guys there, and you fall prey to their whims and fancies.
So this was the case a long time ago. See, every market goes through its infancy, growth stage, and maturity. So I think we are in the process of becoming a mature market. Right? That said, it's still this is one of the reasons that the investor needs to do his utmost to be aware of what's happening, right? If you're going to be led by rumors, that's you're digging your own grave. I just yesterday I happened to open Charlie Munger's book on, I think it's not the Almanac. The first thing the chapter 1 said was, Charlie Munger had said, if you're looking to get rich quick, that's the shortest path to your financial downfall. And suddenly it made so much sense.
Yeah.
There are ways to get rich quick schemes. There are quite a few. But the thing is, not any of them give you consistent returns to take you into the path of wealth. Look at every single stock market made fortune, say from Buffett's to the Mungers. All of them went long. They had significantly long holding periods that made them compound their returns.
Exactly.
I think that would be, for me, if you are asking what's the easiest way to make money in the market, have a long time period, right? Make your investment horizon as long as possible, because that way you also, while paying attention to the market, learn to distinguish noise from signal, right? Not every headline is worth paying attention to. It's very likely that the market has already factored that in, right? And in the longer scale, all of those fluctuations are normalized. Right? So pick a company that is well run, that has a business model that you understand, and you understand it well enough that you put your faith in it that it will make money and outperform the rest of the index, and hold it long enough to get the return that it has the potential to give you. But to answer your question on is the Sri Lankan stock market dominated by a few, no, that's no longer the case, because this is a very retail-driven market. It's very difficult for a few people to run it. It's not the stock market we had in the 90s where hitting 800 was newsworthy. Right? This is a significantly larger market where the power and the influence of one individual is now significantly smaller compared to what we've seen historically. Yes, there are people, there are wealthy people who try to do this, but it's significantly harder than it used to be.
Oh, that's perfect. So that means it has, like any market, as you said, it has moved from an oligarchy to getting closer to a perfect market economy. It's becoming more perfectly competitive otherwise. So it's nicely to see, and it's getting democratized otherwise. So
absolutely,
we can expect this more in the future with more people coming into the market. No, that's good.
Yes, that's the aim actually. The Colombo Stock Exchange and the Securities Exchange Commission is cracking down a lot on market malpractice, market rigging, inside information, and so we are not only NDB Securities, but the whole industry has been trained and reiterated like a religion on what we should and what we should not do. So that is actually giving a lot of protection for individuals who are looking to invest. This is not a market that has been manipulated, but this is a market that is run with natural causes. And when you talk about the market fluctuating from, say, 10, 20, 30% in a week or a day or a month, those are possible things could happen in the frontier market. That's why people come into frontier markets, because the massive fluctuations coming up, and also the same way can go down the same speed as well. Because the market is so small, like if someone buys a large quantity of a particular non-moving stock, that could push the price up, and that causes real investors sometimes to jump on the bandwagon. But that's not, though, as Victor mentioned, though that may be a quick way of making money, it's a very quick way of losing money as well. Yeah. So again, you need to understand what you're investing in and why you're investing in a particular stock. It's no point buying a particular stock because someone has bought a large quantity of it, unless you know what their future intentions are and whether they have good fundamentals to back the growth of the stock.
Exactly.
And from a regulators and a policymakers perspective, this is why they want to make the stock ownership, the share ownership in the CSE, as broad-based as possible. Because right now, as much as the stock indices have increased, you're looking at about a 16% market cap to GDP ratio. If you're looking at the global average, that is closer to 65%. So there are not enough, the ownership of equities in this country is not wide enough. I think we need to get more pension funds to hold ownership. I think you need to mandate more pension funds to hold ownership in the equities and make the efforts of individual investors a lot less marginally important for the whole movement of the market.
However, considering, say, the last 12, 24 months, when we had historic high rates on FDs going up to, say, 30, 20, 24, 22%, and now FD rates are averaging was 7.5%. We are seeing a lot of retail investors who had FDs. They are diversifying a lot of funds into the stock market, and that trend has been there for the last 12, 18 months. And with the economy being what it is, and the governor indicating yesterday there may or may not be another reduction in the base rate, we are seeing more and more individuals considering other sources of increasing their revenue. So if this trend continues and stock market values, we could expect this to accelerate further in the next 12 to 24 months, where you see more newcomers who are very strict with their investment risk appetite. They are loosening it up a bit more stock market, and people who have done in the last 12 months have reaped a lot of benefit.
Brilliant. That's very nice to hear. And as Mr. Nikita said, like if you want to make money quick, then you are a gambler or a speculator. I've only read few books about investing, and I want to keep it like that because you only need to have just like only one Bible or one Bhagavad Gita or one Tripitaka. You just need one proper book. I mean, like for me, it has always been in The Intelligent Investor, supplemented by security analysis, or like one of Peter Lynch's books, or how to analyze a moat company, like the five moats. Other than that, there's nothing much to really, if you really want to learn. And in the first chapter itself, Benjamin Graham clearly says there's a distinction between an investor and a speculator. If you want to be an investor, read this book. Otherwise, you read something else. I mean, because there's so many like videos made and so many, not only on TikTok, on X, there are advices coming up and gurus popping up about like how to invest in, how do you say, like Bitcoin or that coin, this coin, like how to day trade. I've not seriously met a lot of day traders that have made money, and people who get lucky or maybe have some advanced predictive AI driven system could maybe figure that out. But most of us, we don't have access to such systems, and even these AI driven systems will be outperformed by something much more faster or more better. So my point, the question is, therefore, now, what I've seen as a weakness for Sri Lankans, right, living in Sri Lanka, is the inability to invest in other markets. I mean, here it's so simple. Like if you want to invest in another market, you can open a Revolut account. There's a bank called Revolut now. This takes you about 20 minutes to open, and you can buy many stocks that are available in different countries, from different countries. Like, why is that limited? I mean, is there like are brokers like NDB Securities or NDB looking into possibilities of making this like systems to make this a possibility?
Up to us. It is not up to us at all. So this is governed by the central bank regulations, mostly currency regulations. So there is very little we could do on this front.
There were talks for so many years that we could link with, I don't want to name countries, but particular countries, and maybe share the exchanges, but that never came to fruition because the moment that happens, there's a high possibility the dollar reserves of the country will flow out.
It's again related to the like the value of the rupee, exchange rate, and the reserves and all that. Okay, that's very clear. We have to think about the macroeconomic picture, not just the individuals. Clearly understandable. I think that we would be rich enough one day to do that. I mean, of course, we will get there. And okay, any other tips or final advice that you like to add for investors in general, and also specifically for NRSLs and foreigners who would like to invest in the stock market?
Yeah, sure. I speak, and often Nicola can add after that. So just to be very clear, and this is a mandate coming from Securities Exchange Commission and also from NDB Securities as well. Investing stock market or any market in the world has risk. So please do your research before you actually get into the stock market. We as brokers, and also Nikita as him and his research team, to provide you tips and research reports and daily reports on basically how the market is moving or what stocks that you should or should not invest in. But please be aware, your funds are not 100% guaranteed when you invest. The market has been great in the last 24 months. People have earned in excess of 100% sometimes in most stocks. So, however, there is an element of risk as well.
So I think what you need to know is that investing in the long term is disproportionately more beneficial in equities markets. One thing about the foreign investors in Sri Lanka that I've seen is that they hold through the worst possible times, and whenever they see a pickup, they move their funds out. We see that in the post-war CSE. We've seen that in every time where there is a market run, we see that the foreign investors were the first ones out. Keep your investment horizons a little longer, and I would say your returns would be disproportionately higher.
Absolutely. It's something, yeah, just like any business, like if you buy something when it's low or like very high and just sell it when it's very low, it doesn't make any common sense. I mean, this is something that
I think it would make a lot more sense to look at an investment, a share purchase, as less of buying a share as to buying a part of a company.
Exactly.
Think of the company that you're buying. Assume that you're going to own that company. And if you come in with that mindset, although you don't have agency to change the direction of where the company is going as a minority holder, that's why do your work as much as possible, do qualitative investment, look at the people who are running that company, look at the business model, are they making enough cash to support that direction, and keep your money for the long term.
Absolutely. And if you follow people like Ray Dalio, he has he has written incredible books, like the Principles, showing that markets will always have cycles and governed by, different short-term debt cycles, your long-term debt cycles, and, 5 factors. There are so many things that you should take into account from a macroeconomic point of view to understand the market, and you should not panic just because it goes down like for, maybe 5-6 months. It's normal. And what you should do is, if you, as you said, Mr. Nikita, if you have faith in the company that they're invested in by doing his quantitative as well as the qualitative research, it's better to buy more when the price is lower and hold on to it. Okay, brilliant. Yes, anything to add, Mr. Shamal?
Yeah, so now you're saying that's a very good point. Then the market is low. A lot of people think, oh, it's time for me to get out and reduce my losses. But the intelligent investor, what they do is, if they have extra funds, they keep dollar cost averaging.
Yes.
If each time it goes down, they keep buying a small chunk, a small chunk, a small chunk. And if you look at the Colombo Stock Exchange for the last 30, 40 years, yes, obviously it just had down curves. But overall, it's always been on up curve. And so look at the down curve for 3 months, 2 months, 6 months. It's all rebounded and done much better than what it was. So be patient in the Colombo Stock Exchange. If when you invest in something, think of long term, think of 3 years, 5 years. However, in between, if you make X amount of percentage you're happy with, then obviously then you can sell and move on to a different stock or regain the profits. So always have a plan on what you want to do, and always ask yourself, why am I doing this? Why am I investing? If you have a plan, like I'm investing to say hopefully gain 20%, 25% in the next year or 18 months, then that should be your plan. If it goes down, hold on to your guns, and hopefully if you've done your research properly, it'll hit your target or go beyond.
Okay. All right. Thank you very much, Mr. Nikita, and also Mr. Shamal, for contributing your knowledge and spending your valuable time with us. And I hope to see you again. I mean, in investing, we can learn a lot from you.
Yeah, definitely. We'll love to have you around again. If there are questions that come around, we share the podcast. Please to share with us. We probably can do another session so that people, if they have any questions that are pertaining to stock market or research, we can hopefully answer them as well. If you want a live session one day, we're happy to do that as well.
And congrats on all the good work that you've been doing.
Yeah.
Keep it up. I love the work that you do to increase financial literacy with the Sri Lankan diaspora. Well done.
Thank you very much. I had to do that during some of my time bed resting because I don't like to stay without working. So I thought, okay, I saw this syllabus, let me make some videos on it. And so, yeah, I hope it works out and people find it interesting. Thank you very much for that. And again, encouragement from people like you, especially professionals in the field, is very valuable for a channel like us. And also coming out like this and encouraging people to invest, especially in Sri Lanka, is something admirable. Keep up the good work, and thank you very much again for both of you, to both of you. It was my pleasure.
Yeah, it's been an honor and pleasure as well. Thank you very much for your
Thank you
time.
very much. Have a green day. See you. Bye-bye.
Bye.
Thank you.